Forget everything you think you know about gold right now. The real story isn't happening on your screen in New York, it's unfolding in Beijing, and it's about to shake the entire financial world to its core. This is Tuesday, February 3rd, 2026, and the most dangerous game of financial chess just entered its final phase. China is not playing by Western rules anymore. They're about to flip the entire board over, and most investors have no idea what's coming. The United States thinks they're winning because they can manipulate paper prices, but China has been quietly accumulating the one asset that will destroy dollar dominance forever. What I'm about to show you will change how you see every market move from this point forward. 3 days ago, something extraordinary appeared in the pages of Chuxi, the official theoretical journal of the Chinese Communist Party. This wasn't just another policy paper or academic exercise. This was President Xi Jinping himself, sending a direct message to the world and, more importantly, to the People's Bank of China. In this article, Xi explicitly called for the creation of a powerful currency to challenge and ultimately replace the US dollar as the global reserve. He didn't use diplomatic language or subtle hints. He laid out the exact roadmap for how China intends to weaponize its currency in the coming economic war. But here's what makes this absolutely terrifying for anyone holding US dollars. Xi directly linked currency strength to gold accumulation. He's telling the world that the era of fiat dominance is ending. The era of hard asset-backed currencies is beginning, and China is already positioned to win. This isn't speculation or conspiracy theory. This is official policy from the second largest economy on Earth. When Xi publishes in Chuxi, it's not a suggestion. It's a command to every financial institution in China. The timing of this announcement is what should make you sit up and pay attention. Why now? Why publish this directive just 3 days after Western banks orchestrated a massive takedown of gold and silver prices? Because Beijing saw that takedown for exactly what it was: desperation. The United States tried to defend the dollar by painting scary charts and triggering stop losses. China looked at the same move and saw vulnerability, weakness, and the perfect moment to strike. While Western traders were panicking about red candles on their screens, Chinese officials were backing up the armored trucks. They turned the American price manipulation into the biggest strategic blunder since the fall of Saigon. The US put strategic assets on a clearance sale for their greatest rival. The most powerful surveillance state in history just received orders to accumulate gold at any cost. Every bank, every refinery, every import channel is now working toward a single goal. Xi's article goes further. He explicitly states that financial security is now a matter of national sovereignty, using the language of war, not economics. Intelligence reports from Shanghai's financial district are converging on an earth-shattering conclusion. China is preparing to officially update their gold reserve numbers, and the real figure will shock the world. China has been reporting reserves everyone knows are fake, claiming 20, 30 tons per month. But tracking actual metal flow through Hong Kong and domestic production reveals the math doesn't add up. The real accumulation is 10 times higher. We're talking about thousands of tons stored in off-balance sheet military accounts. They've built a secret gold fortress, while the West chased Bitcoin and NFTs. They played the long game while America focused on quarterly earnings. Now they're revealing their hand at the worst possible moment. Imagine this scenario. US markets are in chaos with 38 trillion in debt. Then China calls an emergency press conference. They don't roll out tanks or fire missiles. They simply update a single number on a spreadsheet. Instead of 2,200 tons, they announce 25,000 tons. They reveal the renminbi is backed by more physical metal than any currency in history. What happens to the dollar? It collapses overnight. The psychological impact alone triggers a flight from dollars, making 2008 look like a minor correction. Gold doesn't slowly rise. It teleports to $10,000 per ounce within 24 hours as markets realize true supply dynamics. Every central bank sitting on the fence immediately dumps treasuries to buy gold. Every sovereign wealth fund rushes to protect assets. The scramble would be unlike anything in modern history. This is what I call the financial military parade. Just like China rolls hypersonic missiles through Tiananmen Square to demonstrate military power, this gold reveal is designed to demonstrate absolute financial dominance. It's a warning shot to Washington that says, your era is over, ours is beginning. The craziest part of this entire situation is that the United States accidentally helped China execute this plan. By smashing gold prices last week, they made it cheaper for China to complete their accumulation. They put the final pieces of the puzzle on sale. Chinese buyers are laughing. They're taking every ounce flowing from London and New York at discount prices. The West is selling the rope China will use to hang the dollar. There's a mathematical reality explaining why Western vaults are bleeding metal. We need to understand the Shanghai arbitrage vacuum. Silver trades at massive premium in Shanghai versus New York and London. The paper price in the US got smashed to mid-80s. In China, buyers didn't blink. The premium Chinese buyers pay is 29% above Western prices. That's $25 per ounce more than New York. Factor in the 13% VAT Chinese buyers must pay, and the effective price inside China is $36 above Western spot. Let's talk logistics. Chartering a secure armored plane, ensuring cargo, flying tons of silver from London to Shanghai costs approximately $2 per ounce. Simple math. Spread is $36, shipping $2. That leaves pure risk-free profit of $34 per ounce. This arbitrage appears once in a generation. It's free money waiting to be collected. Why would any bullion bank or mining company sell silver in New York for $86? They wouldn't. Load every bar onto a plane to Shanghai where it sells for $120. Instant 40% return on a 12-hour flight. Literally, no better trade exists right now. Water flows downhill, capital to highest return, silver to highest bidder. China is the highest bidder by massive margin. They're paying $34 bounty on every ounce in existence. They're telling the world, bring us metal, drain vaults, empty ETFs, we'll pay premium. Western banks, focused on quarterly profits, take the bait without seeing strategic implications. They're draining LBMA London vaults. They're emptying COMEX New York warehouses. They're stripping the West of critical industrial and monetary metal for short-term arbitrage spreads. Every day this gap exists, thousands of bars leave the Western system forever. Once silver crosses into China, it never returns. China doesn't export silver, they're a black hole. It builds solar panels, electronics, missiles, and backs their new powerful currency. Once gone, it's gone forever. West cannot recover it. The paper smash was catastrophic strategic error. Pushing U.S. price to $86 made arbitrage wider, made shipping east more profitable, essentially subsidized Chinese accumulation while supposedly defending the dollar. They sold family silver to pay credit cards. Now realizing the house is empty. U.S. government has satellites and tracking. They see cargo planes taking off loaded with metals. They know what's happening. They know if this continues 30 days, zero registered silver remains in COMEX. They're facing actual physical default. Panic is setting in at highest government levels. Tomorrow, February 4th, Secretary Marco Rubio hosts Emergency Critical Minerals Ministerial in Washington. He's summoning ambassadors and trade ministers from every allied nation. Official press release talks about strengthening supply chains and ensuring resilience. Translation: China is taking everything. We desperately need help. They're trying to form metals, NATO, a Western alliance stopping Chinese vacuum from sucking up remaining global silver. Here's the fundamental problem. Silver isn't just monetary metal anymore in 21st century. It's the strategic resource underpinning modern technology. Green energy transition requires massive silver. Solar panels need silver. AI revolution needs silver. Advanced chips use silver interconnects. Modern military needs silver. Every missile, jet, satellite depends on it. U.S. consumes 5 times more silver than domestic production. We're completely dependent on imports from Mexico, Peru, and global market. China is buying out entire global market with massive premiums. Rubio knows if COMEX runs dry by March, entire U.S. military-industrial complex faces critical shortages. Lockheed Martin would call Pentagon reporting they can't build guidance systems without silver. That's not an economic problem. That's a national security crisis of the highest order. This meeting tomorrow isn't a trade summit. It's an emergency war council. They're going to try to strong-arm allies into restricting critical mineral exports to non-market economies, which is code for China. They might attempt to ban the arbitrage trade outright. They could even propose capital controls on strategic metals. The argument would be, you can't ship silver to Shanghai because it's a matter of national defense and sovereignty. But here's why their plan will fail spectacularly. You cannot legislate away the fundamental laws of economics. You cannot stop the flow of water with a piece of paper. As long as the price in Shanghai is $36 higher than New York, the metal will find a way to get there. If official channels are blocked, smugglers will move it. Third-party nations will buy from the U.S. and resell to China. The black market always fills the gaps that governments create. There's too much money to be made, and money always finds a path. The only way to actually stop the drain is for the Western price to rise dramatically. The price in New York would have to go up to match Shanghai's price. The $86 suppression scheme would have to end completely. The U.S. would need to let silver trade at $120 just to keep it inside the country. This emergency meeting is essentially an admission of defeat. It's the U.S. government publicly admitting that the free market they claim to champion is currently destroying their strategic position. They suppressed the price too low for too long using paper manipulation. They held the beach ball underwater, and now it's rocketing up and hitting them in the face. Marco Rubio is trying to hold that beach ball down using executive orders and diplomatic pressure. It won't work, and the market knows it won't work. That's why, despite last week's brutal paper smash, the price is already fighting back aggressively. The psychology hasn't broken. Traders worldwide see the desperation coming from Washington. They smell blood in the water. When governments start holding emergency meetings about supply chains, it means one thing: the cupboard is bare. Now let's talk about what happened immediately after the attempted takedown. Yesterday's smash was supposed to break the bull market and terrify retail investors into selling. It was a shock and awe campaign designed to create maximum fear. They used every tool available: coordination with central banks, massive paper short positions, triggered stop losses, and engineered a crash to $83 silver. Usually, after a takedown of that magnitude, the market stays down for weeks. The bulls get scared, momentum traders exit, and fear dominates. But look at what actually happened. It's Tuesday morning, and where's the price? Is it still crashed at 83? No, silver has already rocketed back above $86. Gold has jumped back above $4,900 per ounce. The entire smash lasted less than 24 hours before completely reversing. This is a massive psychological signal. It tells us that the buyers are now stronger than the sellers. It tells us that the market looked at the crash and realized the truth. It was fake, artificial, and unsustainable. Traders looked at the Shanghai price, which never crashed, and realized the drop in New York was simply a gift. They saw the $34 arbitrage gap and understood that silver at $83 was dramatically mispriced. So they bought with both hands, absorbing every ounce the manipulators tried to dump. This is the textbook definition of a failed suppression attempt. In technical analysis, when you try to force a move and it fails, it typically leads to a fast move in the opposite direction. When you try to hold a beach ball underwater and you lose your grip, it doesn't just float up gently, it explodes out of the water. We're now in that explosion phase. The short sellers who dumped yesterday hoping to drive the price to $70 are now completely trapped. They sold at the bottom, and now the price is $86 and climbing. They're underwater on their positions. As the price ticks higher to $87, $90, or $95, they'll be forced to cover by buying back what they sold. This is the fuel for the squeeze. The smash was supposed to kill the bull market. Instead, it confirmed the bull market is stronger than ever. It proved that even with the entire weight of the U.S. government and banking cartel pushing down, they cannot keep silver below $85 for more than a single day. That $85 level is now a concrete floor. If $85 is the floor, then the ceiling is unlimited. Think about the physical reality supporting this price bounce. While the paper price was violently whipsawing in New York, the physical market in Shanghai just kept grinding higher. Chinese buyers didn't care about the Western takedown attempt. They don't watch CNBC or follow Jerome Powell's speeches. They care about ounces, and they kept buying at premium prices. The volume on the Shanghai Gold Exchange is absolutely exploding. They're draining global metal supplies at a rate that's mathematically unsustainable for the West. The Western paper price must rise to catch up to physical reality. The arbitrage vacuum guarantees it. Unless New York lets silver trade at $120, the metal will continue leaving. It's not speculation, it's mathematical certainty. It's the only way to stop the physical bleeding. The U.S. banks will eventually be forced to capitulate and go long. They'll have to let the price run just to prevent COMEX from suffering a catastrophic default. The attempt to save the dollar has completely backfired. They tried to make fiat look strong by smashing gold and silver, but both metals bounced within 24 hours. Now the dollar looks weaker than ever because it couldn't even suppress metal prices for one full trading session. The emperor has no clothes. The Federal Reserve has no bullets left. The cartel has no silver in their vaults. This sets up the final act of this financial drama. We have Xi's signal calling for the powerful currency backed by gold. We have the arbitrage vacuum physically draining Western vaults. We have panic in the U.S. State Department. We have the price recovery confirming the trend is unbreakable. The chessboard is set for checkmate. The only question remaining is, where will you position yourself when the announcement comes? Do you want to be holding paper dollars that are losing a geopolitical war? Or do you want to be holding the asset that China is buying to replace the dollar system? Here's my final verdict after connecting all these dots. We've seen the official signal from President Xi himself calling for a powerful currency to challenge the dollar. We've seen the mathematical vacuum created by the $34 arbitrage gap that's draining the West. We've witnessed the panic in Washington as Marco Rubio scrambles to form a minerals alliance. We've watched the price recovery back above $86, proving market psychology remains unbroken. The conclusion is simple and terrifying for anyone holding U.S. dollar assets. The United States just played its final card. They used diplomatic pressure, paper manipulation, and coordinated central bank messaging to try crushing the precious metals market. They wanted to scare you into selling. They wanted to save the dollar's dominance. But all they accomplished was putting the world's most strategic asset on clearance sale for their greatest geopolitical rival. The U.S. smashed the paper price using derivatives and algorithms. China looked at the sale and said, "Thank you very much." Then they backed up armored trucks and bought the physical metal at a massive discount. Now the vaults in New York and London are emptying at record speeds. The river of silver is flowing east, and it's never flowing back west. The State Department is holding emergency meetings because they know what comes next. They know that by March, if this flow continues, COMEX will be a hollow shell with nothing but paper promises. They know that American technological and military dominance depends on securing critical minerals. They know Pax Americana is dying because they manipulated prices too successfully for too long. This means the price of silver in Western markets has only two possible destinations. Option 1, it goes to zero because there's no metal left to trade in New York. Option 2, it goes to $120 or higher to match Shanghai's price and stop the exodus. The $34 arbitrage gap is a law of nature. It must close. And it will not close by Shanghai coming down. It will close by New York being forced up. The suppression has failed. The dam is breaking. The squeeze is accelerating. You're getting a second chance right now. The crash gave you a brief window to buy silver at a discount created by the strategic stupidity of central planners who don't understand the physical market. Do not waste this opportunity. Do not let the volatility and scary headlines shake you out of your position. The squeeze is not over, it's just beginning. The financial military parade is about to start, and you want to be holding the assets sitting on the lead float. Ignore the paper games and manipulation. Trust the physical flow and the mathematics. The East is buying everything they can get their hands on. The West is panicking at the highest levels. The price is rising, despite maximum suppression efforts.